Esteemed guests, ladies and gentlemen, the moment you have all, or we have all been waiting for, allow me to invite on stage YB Rafizi Ramli, Minister of Economy, Malaysia, to deliver his keynote address. Make some noise, a little louder, please. Come on, everyone.
Thank you very much, the live band. Assalamualaikum warahmatullahi wabarakatuh and a very good afternoon. Yang berbahagia Tan Sri Datuk Sri Dr. Jeffrey Chia, ASLI Chairman, Founder and Chairman of Sunway Group, His Excellency Yeth Vinel, Under Secretary of State, Ministry of Economy and Finance, Cambodia, His Excellency Kim Rithi, Governor of okay, I might have a difficulty pronouncing this, Iha, Cambodia, Tan Sri Datuk Sri Razman Hashim, Deputy Chairman of the group, my colleague Encik Apurva Sangi, Lead Economist for Malaysia World Bank, Saudara Daniel Rahman, CEO of ASLI, ladies and gentlemen, thank you very much for the invitation and all the strategic partners from the banking and finance industry for this summit today. I also like to begin to take this opportunity to express congratulations to Tan Sri Datuk Sri Jeffrey Chia on receiving a knighthood from His Majesty Charles III. The recognition is for his contributions in forging collaborative links between Malaysia and the UK, and we all know so much has happened since the early 80s, as he related his story just now. The past 3 years have redefined the fiscal and monetary paradigms for countries across the world. In an attempt to curb inflation, central banks have conducted the steepest series of interest rate increases haven't seen in decades, which also create a lot of problems for the government in this country, because as far as the public is concerned, the indicators for the robustness of the economy is always either the exchange rate or the bursa, never mind everything else that happened beyond the bursa and ringgit strength. But we all know it's a challenging time, and the cascading effect of this higher for longer environment has reverberated throughout each segment of society across the world. From the macro perspective, the government is managing a growing debt burden, with debt to GDP ratio hitting 63%. Businesses, and we all have experienced this one way or another, have had to claw back revenue from the pandemic years. At the core of this is a banking and finance industry that had to navigate an economy that was relatively almost at a standstill for almost 2 years. Yet on the back of these higher interest rates, and this is also the difficulty the government has had to manage, because as far as the public is concerned, banks have managed to bolster their earnings with record highs in net interest income and robust growth in loans. However, as is the case with the cyclical nature of any market, where the peaks have been in net interest income, the troughs have come from the non-interest income side, specifically in the form of the advisory and fee-based business. Sometimes I choose to ignore public demands that banks do a lot more from public perspective, given the challenging time, because we understand while the profitability, while the revenue seems to be robust, but we have to take an overall perspective of the industry against the backdrop of these challenges. Uncertainty in the financial markets has forced many from the buy side to revise the investments choices. With the lull in private equity deals continuing into 2023, many GPs, as we talk about the startup and digital and tech ecosystems, I've spent a lot of time talking to GPs in the last few months, and I do understand, having run a startup myself before, that we are going through a period where there will be limited exit opportunities for private deals, for private equities, for venture capitals. Of course, this will jeopardize the reinvestment life cycles as dry powder is accumulating, but no capital is being deployed into the system. So that more or less is the problem statement for the country. On the one hand, we do have capitals. On the other hand, we have to see and seek new growth opportunities against the backdrop of changing landscape. For those in digital and tech, in private capitals, for example, the days of high valuation and high exit deals are over. Unfortunately, I had to take this job against that backdrop. When we were designing the government, there were a few gaps that we realized we have to close very quickly to ensure that Malaysia can keep up and catch up. First and foremost is a growth narrative. Given what had happened from the first democratic change in Malaysia in 2018, and then the pandemic, the concern has always been, what is the growth narrative for the country? And regardless of our fundamental strengths economically, unless we have the right growth narrative, it will be quite difficult for us to pitch our story to the world and investors. While it's unfortunate that I have to take up this job against that backdrop, but I think it's also a blessing in disguise that being the Minister of Economy, while you have to contend with constant pressure of the public and industry wanting to see what's next, I constantly tell myself that it is the privilege of the job that I have to take a long-term horizon view on planning the economy. In the case of foreign exchange rate, for example, and the strength of ringgit, while it is the single most pressing issue as far as the general public is concerned, but we do understand the backdrop, and I've repeated over and over again, this is a time to strengthen our fundamentals so that when the market normalizes against, Malaysia will be in the best position to reflect a much better position of ringgit versus other currencies in the world. So likewise, for the banking and financial industry, I hope the same viewpoint is taken, which is against all these challenges, this is a time to be creative, this is the time to take a longer horizon in your planning, because whatever the shortfall in net interest income that may come in the next 1 or 2 years, there will be a lot of opportunities in the non-interest income side. And it's given this problem statement that we have chosen to focus on energy transition as the first major policy pivot for the country. I know and have followed the work that Tan Sri Jeffrey Chia and his colleagues had done from Sunway. My ministry coordinates the planning for SDG. And while by and large the public may see energy transition as a sustainable agenda, we look at energy transition as a core economic pivot for the country. First, it's very important to secure our energy future, because at the rate we consume energy and at the rate of our energy mix in the country, I do not rule out imports of energy within 10 to 15 years. It is extremely important to do whatever we can while we still have the time to insulate the country from a possibility of energy import in the future. Because once our energy mix depends on imports, we lose a lot of control in how we manage our economy. And on that basis, not only that we have focused on energy transition to start the growth narrative, I'm sure all of us have followed. In the midterm review, the government has also launched and identified 5 new sectors. Well, not necessarily new, not all are new, but 5 sectors which we consider as high growth, high value sectors in order to define our growth narratives to the economy and the world. These are the high-end E&E industry, moving away from the back end to front end and IC design, rare earth industry, modern agriculture, energy transition industry, and the digital and tech through the startup ecosystem. It is the latter 2 that I want to focus and I hope will be of some interest to those of you today as well. So, ladies and gentlemen, drawing on the second theme of today's summit, the National Energy Transition Roadmap, I went through the itinerary. You will have an afternoon going through and discussing about National Energy Transition Roadmap. The NETA, announced earlier in the year, aims to transition Malaysia to a sustainable and inclusive economy that is powered by a robust energy system, and we have identified 10 catalytic projects. It's a framework for our country to transform the stagnant structures of our economy fundamentally. And as we have announced before, market liberalization decisions will open up to 1.85 trillion ringgit worth of investment opportunities by 2050. 350,000 jobs is expected to be created, and as a result of this, we expect a corresponding lift of up to 10 to 50% in GDP in that period. By capitalizing on this transition towards renewable energy, Malaysia's financial industry will have the once-in-a-generation opportunity to capture large segments of the transition value chain. This includes expanding our gigawatt hours of storage, and we can't build the capacity without battery and energy storage systems. And we have looked at the experience of other countries, where there must be a full integration of the generating capacity, solar farms and so on, as well as the investments in the grid to make sure that whatever generation capacity that is being built, because the focus is usually always on the generation capacity, that must be reciprocated by the investments into the grid. And in our case, we are looking at interlinking Semenanjung and Sabah and Sarawak via undersea cable. We are linking, we have to complete the ASEAN intergrid so that we have access, and our colleagues in Cambodia, in Laos, correspondingly have markets down south. And we hope to lead this region in terms of building an efficient and robust battery energy storage system into our grid. But it goes beyond what we understand about solar. The government also has launched the hydrogen energy roadmap. And through hydrogen energy, I hope the country will be able to replicate our experience with LNG, which is to build a value chain, not just in the country, but with our partners, especially on the Far East. What we have done really well with LNG, we now have the opportunity to lead the same value chain, this time a hydrogen value chain, from Malaysia with the markets in the Far East, and hopefully Malaysia will be at the forefront of building and developing a hydrogen energy system in this region. Of course, every time we talk about all this, while the numbers are interesting, the GDP numbers, the job creation, the investment opportunity looks interesting, it cannot happen without the financing. And while our banking and financial sector has led the way in terms of green financing, what I hope to be able to catch up and work with the banking and financial industry after this is to develop a transition financing. And I think that's where the existing approach and perspective about green financing and sustainability financing has to be expanded to include transitioning financing. And the government has announced a 2 billion fund managed through my ministry. And I hope that will open up the channels for the government to work with the banking and financial sectors for us to expand what already is a good system for green financing to also include transition financing, which is far bigger than the understanding of green financing that exists in our financial market now. Ladies and gentlemen, the second high growth, high value sector that I hope will interest a lot of you today is the digital and tech, the startup ecosystem. We have announced a series of plans to create and develop Kuala Lumpur, and by Kuala Lumpur, I mean the whole Klang Valley, because there's always the question, why Kuala Lumpur, why not Cyberjaya, why not Putrajaya, why not this and that? By and large, the world identify Kuala Lumpur as the whole greater Klang Valley. And we have announced several steps to facilitate the growth of startup ecosystems in the country. And in February and March 2024, the government will launch and announce another sectoral blueprint in the same way that we have launched the National Energy Transition Roadmap for energy transition industries. About 3-4 months from now, we will announce a document called KL20, which is a sectoral blueprint to transform Kuala Lumpur as a top 20 ecosystem for digital and tech industry in the world. We are now about, in the ranking, we are about 60 plus now. And the whole idea is to focus, to bring in the talents, and with the talents also venture capital firms, the funds, to create KL as the hub for digital and tech talents around the world. Some of the backroom decisions have been made towards that. For example, we have worked towards a single window for all stakeholders in the ecosystem, and this will allow the government to streamline and centralize our currently fragmented ecosystem of 14 agencies and 20 funding programs into one single interface with the stakeholders. If you are a digital and tech startup now, you may be sent on a merry-go-round from one agency to another, and you may have to apply to multiple agencies to pursue your business plan. The idea is everything now can be done through a single window, and whatever coordination that has to be done by the 14 government agencies can be done in the back end. And that's just one example. Towards the launch of KL20, we are also looking at reviewing the tax incentives. We are looking at focusing on getting more angel investors and individual investors as we shift the focus from having unicorns to creating as many pre-seed and seed level startups, as many as possible. Because digital and tech ecosystem is all about the funnel. And the success rate for digital and tech is very low, most probably 5%. So only 5% of digital and tech startups will survive the so-called valley of death and eventually go towards Series A, Series B, Series D, and eventually get listed. So if your funnel at the pre-seed and seed level is very low, you are working with a limited pool of companies and people, obviously the chance that Malaysia as an economy will be able to create robust digital and tech startups that will be able to take opportunity of the Series A, Series B, and Series C will get lower and lower. And hopefully, when we launch this in 3 to 4 months' time, it will be able to bring all the stakeholders into the ecosystem and provide the necessary jolt required for startups. And I've always maintained this over and over again, and I didn't necessarily agree with the environment in the last 10 to 15 years where valuation was super high. So we have to remain true that startups need to have a clearer path to profitability, but we also have to accept that growth remains an important indicator of good ideas. We must also remain cognizant that the funding of sound ideas unlocks greater productivity within the economy and spurs sustainable growth. And this is where, again, I would like to throw the challenge to the banking and financial industry in this country. Given the nature of these high growth, high value industries, the energy transition and digital and tech, these are not traditional industries. Most probably, it is not subject to your normal evaluation. How exactly the banking and financial industry keep up with the demand and opportunities provided by these two industries that require creativity and innovative ideas on your own in order to fund and power these two high growth sectors. So, ladies and gentlemen, at the end of the day, while we are trying our best as a government to create a healthy deal flow for the economy, we are also constrained by the current status quo of high public expenditure, which means that as much as we are trying our best to allocate catalytic funds to the industry and to the banking and financial sector, that alone, the public fund alone, will not be adequate. Therein lies much of Malaysia's problems, which is if we were to do this pivot in the next 3 to 4 years, we do require every single one on board. And as government focuses a lot more on basic infrastructure needs of the public, the idea is to open up and liberalize as much as possible the room and opportunities for the private sector to come in. The reality is that comprehensive large-scale progress is best undertaken by the private sector, catalyzed by the financing from the banking and the finance industry. The genius of those of you in the audience, hopefully, is your organization's ability to spread risk, execute rapidly, and adhere to robust governance, given the challenging nature of the 5 high-growth, high-value sectors that are now the focus of the government. And hopefully, with the direction and support of the government, I hope there has never been a more opportune time for the banking and finance sector to act. We have sufficient infrastructure, incentives, and initiative to drive Malaysia forward for a just and equitable transition. So with that, ladies and gentlemen, thank you once again to the organizer, to ASLI, for this invitation. I hope as we roll out more and more sectoral blueprints, I do hope that we get feedback, we can work together, and to the rest of the world, I hope they will see a cohesive and coherent narrative from the country going forward so that we can realize our ambition that Malaysia should be able to achieve a high-income nation in the window of 2026 to 2028. And the window is real, but we do require every single one to come on board and to run faster and to keep up with the pace of the transformation that we are putting in place. With that, congratulations, have a good day after this, and thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
YB, we would like for you to remain on stage. At this point, I'd like to call upon Tan Sri to present a token of appreciation from us here to YB Rafizi for gracing this event. Once again, ladies and gentlemen, a warm round of applause for YB Rafizi Ramli. Thank you very much. We just want to do one small thing, which is to take a family photo with the both of you standing facing the stage with the crowd. Yeah, okay. This way down. Yeah. No, just down. Yeah. Can we all please rise to take a family photo? So we'll get all the camera crew up top. Can we bring the music down a little, please? Thank you. Okay, is everyone ready? Okay, on the count of three, on a three count, you shout ASLI with me. Ready? In 3, 2, 1. Not very good. One more time. 3, 2, 1. Much better. Do we want to do the freestyle? Yes, let's do a freestyle. In 3, 2, 1, freestyle. Thank you very much. Thank you very much, YB. Tan Sri, thank you very much. We'd like to invite YB Rafizi for a luncheon with our strategic partners. Tan Sri, thank you very much. An honor and a pleasure to be here with you. Ladies and gentlemen, we'll break for lunch and we'll come back for the second half. Enjoy your lunch. Thank you very much for joining us at the summit. Once again, a warm round of applause for YB Rafizi and Tan Sri Jeffrey. Thank you. A little louder. Come on, Malaysia. Come on, Kuala Lumpur. You can do this. Bring it up a little, yeah.